Welcome to The Explainer. Ever wonder what really separates a professional trader from an amateur? It's not a crystal ball, that's for sure. It's their toolkit. And today, we're going to crack that toolkit wide open and check out the advanced indicators pros use to get their edge.
Okay, so here's our game plan. First, we'll pin down what that professional edge actually is. Then we're going to stock our own toolkit with 4 of their key instruments. After that, we'll walk through their process, how they actually use this stuff together, then we'll cover the big mistakes to avoid, and wrap it all up with a path for you to start building your own system.
All right, let's dive right in. The professional's edge. What is it that separates them from the rest of us? Well, it really boils down to 2 things: the tools they use, and maybe even more importantly, the mindset they bring to the table.
And you know, this quote really hits the nail on the head. It says it all, right? It's not just about slapping a moving average on a chart. The real secret is using a combination of more advanced tools to see what's happening beneath the surface, to find those hidden market dynamics.
So that just begs the question, doesn't it? What are these sophisticated tools? And how in the world do they work together to paint a clearer picture of what the market is actually doing?
Okay, let's get into it. Time to open up that professional toolkit. We can really break it all down into 4 main categories. Think of them as the 4 cornerstone pillars of how a pro analyzes the market.
So what are they? Momentum, trend, volatility, and market breadth. And listen, this isn't just some random shopping list. There's a real logic here. You're starting small with short-term energy, then zooming out to the overall direction, figuring out your risk, and finally, taking the temperature of the whole market.
All right, first up, momentum oscillators. Think of these as the market's speedometer. They're all about measuring the speed and the strength of a price move. Is the market putting the pedal to the metal, or is it about to run out of gas? That's what these tell you.
And here's where it gets really practical. Let's take a classic tool like the stochastic oscillator. It's not just a squiggly line. It gives you concrete signals. When it gets above 80, that's your overbought warning, a sign the market might need to cool off. And when it dips below 20, that's oversold, which could mean a bounce is on the horizon. See? Simple, actionable rules.
But momentum is just one piece of the puzzle, right? So next up, we've got trend indicators. These answer the big question: is this a real sustainable move or just a bit of noise? Then you have volatility indicators. Think of these as your risk manager. They tell you how wild the ride is, which is absolutely crucial for figuring out how much to bet. And finally, market breadth indicators. These give you that 30,000-foot view. Is the whole army advancing, or is it just a few generals leading the charge? That's what these tell you.
Okay, so we've got the tools. But you know, just having a great set of tools doesn't make you a master carpenter. The real secret sauce is knowing how to use them all together. It's about having a process, a system.
And this is it. This is the process. It's a beautiful, logical flow, kind of like a funnel. You see how it starts big picture with market context? First, they ask, is the overall market even healthy? Then they zoom in. What's the trend? Then, is there any momentum here? It's only after all that they even start thinking about a specific entry point. And check this out. Look at steps 4 and 6. Risk management isn't the last thing they think about. It's baked right into the middle of the process. They figure out the risk before they pull the trigger, and then they lock it in with their position size and stops. That right there is a game changer.
Now, you can have the best process in the world, but it's still super easy to trip up. There are a few classic mistakes that can totally wreck your analysis. Honestly, knowing what not to do is probably just as important as knowing what to do.
And this just lays it all out, side by side. On one hand, you've got indicator overload, just piling on so much stuff your chart looks like spaghetti. That's the amateur mistake. The pro? They pick just a handful of tools that work well together. And here's the key. They wait for confirmation. They need to see a few things line up before they make a move. No chasing every little twitch in the price.
But out of all these best practices, if you had to nail down the most important one, it's this: a risk-first approach. I mean, professionals are absolutely obsessed with not losing money. So how do they do it? How do they get super precise about their risk? Well, it is definitely not guesswork. They use one of those tools we talked about, a volatility indicator like the ATR, and they use it to calculate the exact number of shares to buy based on how jumpy the stock is. So the math might tell them, buy exactly 143 shares, not 100, not 200, 143. And here's why that's so cool. When you trade that specific number of shares, your risk is totally defined. You know that if the trade goes against you, you're only going to lose, say, a fixed 2% of your account. It doesn't matter if the price goes crazy, your risk is capped. And that is how you turn trading from gambling into a real business. Okay, let's start to bring this all home.
We've looked at the tools, the process, the common mistakes. Now let's talk about priority. How do pros weigh all this information? This is really your path to mastering this stuff.
This chart is just fantastic. Look at where the pros put their focus, a whopping 40% on the big picture market context, then 30% on the trend. The actual entry signal, that's only 20% of their focus. Now, most amateurs do this completely backwards. They spend 90% of their energy stressing about the perfect entry signal and almost totally ignore the bigger context and trend that actually drive the market.
And the last thing to really hammer home is this. These indicators, as powerful as they are, don't work in isolation. They're just one part of a bigger system. Real mastery comes when you combine them with other things, like chart patterns, volume analysis, and, probably the hardest part, mastering your own trading psychology. So when you boil it all down, what's the big takeaway? The professional's edge isn't one magic indicator they found on the internet. It's a complete system. It's a process. It's a mindset. It's an entire toolkit used with discipline. We've just laid out the blueprint for you. So the real question now is, what are you going to build?